Hi everybody. I am now beginning this live Q&A here on Instagram. So any of you have any questions? I get a lot of comments that people have questions that they want to ask me. Well, here's your opportunity to ask any questions that come to mind. Now I have to figure out how to see the questions so that I can answer them. I'm seeing a bunch of comments going through, but these look like they're just chats. So I haven't been able to identify
when will gold go up?
Any questions yet. Somebody's asking me a question on when gold will go up. Well, I mean, gold's been going up, hasn't gone up that much recently, but if you go back to the beginning of this decade or century rather, 2000, that's when the NASDAQ bubble peaked. That's when the gold price was really at the bottom of a 20-year bear market that it entered into in 1980. And remember, in 1980, gold was very expensive. It was at $850 an ounce. It had risen from $35 an ounce at the beginning of the decade to $850 at the end. Then, of course, we had Paul Volcker, Ronald Reagan. We had 20% interest rates. And that saved the dollar, that brought the price of gold back down. Of course, it never went anywhere near the $35 an ounce that it started from. But it did get back below 300. It was below 300, as a matter of fact, in 2000. And then it had a big rise from 2000 to from under 300 to over 2000 was the run that it's been on recently. It's now pulled back below 1800. But if you look at what's been happening to the price of gold so far this century, this millennium even, it's been pretty strong. Now, people, maybe they expect gold to act like Bitcoin. It's not going to act like Bitcoin. It's a real asset, and it's a real market, and it's not going to have that kind of parabolic move unless, of course, you have a complete implosion of the dollar, which is certainly not off the table as far as what may happen in the future. But if that's the case, it's really not the price of gold going up. It's just the value of the dollar going down. And so you need more and more dollars to buy an ounce of gold. But I do think that the price of gold is going to resume the upward trend and move much higher than 2000 as people really digest the enormity of the problem that exists, as they come to terms with the fact that inflation is not only not transitory, it's here to stay, it's going to get much worse, and the Fed can't do anything about it, at least not that they're willing to do, without creating another financial crisis, which they won't do. And even if they inadvertently created a financial crisis, we already know what their response would be more inflation. They would print more money, they would bail everybody out. And so ultimately, that's going to be positive for gold as well. So people just have to be patient when it comes to the price of gold, but the direction is already clear, and that's up, and it's been going up for some time. Question, okay, here's one. Is it a good time to get a loan? Well, depends on what you do with the money. Right? If you can borrow the money, really low interest rates, and you can acquire real property, real assets, especially that have a return. So if you're requiring a building and you collect rent, if you're buying a stock and it pays a good dividend, and the rental income from the real estate or the dividends on the stock, if that number is much higher than the cost of borrowing money, then it obviously makes a lot of sense to take out the loan. And then, of course, as inflation erodes away the value of that debt, it'll also increase the nominal price of whatever asset you acquire. So you can certainly get rich during inflation, but you have to remember the flip side of that is somebody else is getting poor. Whoever loans you the money at that low rate of interest is the loser. Now, of course, it could be the government, it could be the Fed really that is on the other side of that transaction, which means it's the American public that is the loser. The owner of US dollars, they're the losers. The savers, the people that own treasuries or any dollar-denominated debt, they're on the losing end of this inflationary transfer. And if you've borrowed a currency that's being inflated and you've acquired real assets, then you end up becoming the winner. The problem would be if you over leverage yourself and there was a circumstance where rates went up and you weren't locked in, or the value of the assets that you bought went down and maybe you're forced to sell. So it's not without risk, but of course there's also tremendous reward. Just don't borrow too much. Okay, I'm having a question as how high will Bitcoin go before it crashes? I don't know. I obviously have no idea how high it's going to go before it crashes. But it's going to crash. That's the only thing I'm sure about. It'll probably crash many, many times. I mean, it's got a long way to go down, and I'm sure there's going to be multiple crashes during this process. The question is, when will it crash and not recover? Because we've had a lot of Bitcoin crashes over the last decade or so. But the one thing these crashes all have in common is that eventually the price recovered and made a new high. Now, the last high that Bitcoin made was about 65,000. Will we eventually recover and trade at a higher high? It's possible, but it's also possible that it won't, and that is the top. And we're going a lot lower. And if we are going a lot lower, there's probably going to be several crashes along the way, but there will also be a lot of sharp rallies, and those rallies will, rekindle hope. They'll get people to think that the bottom is in, the worst is over. They're glad they didn't sell. They'll probably sucker in some more buyers, maybe cause some of the shorts to cover before the market rolls over and then crashes again to make a new low and then repeats the cycle. But ultimately, this is how I think it's going to happen until, there is a final collapse in the price. But who knows, how low it's going to be before we get that crash. But it's going to happen. And so if you're in Bitcoin, don't press your luck. Take some chips off the table. If you want to keep some chips on the table, just to gamble, just in case, all right? If you have a lot of winnings and you take most of your winnings off the table, or all of what you started with, so you're gambling with the house's money. If you want to do that, I'm not going to have a big argument with you. But you can't have a lot of money invested in something like Bitcoin. It's too speculative. The risks are too great. And of course, if the price goes up, well, a little Bitcoin can go a long way. So you don't have to put too much in. If people who think it's going to 1 million or whatever, if they're right, well, you don't need to put too much in to have a great trade. If they're wrong and you put too much in, you have a disaster of a trade. All right, next question. What are my thoughts on life insurance? Well, first of all, it depends on your circumstances, because life insurance makes sense for some people and it doesn't make sense for others. So the most important thing about life insurance is that there's an insurable interest, right? Let's say, you're a young father, you're in your 30s and you got a wife and a couple of young kids, and they really depend on your income, on your paycheck. Maybe your wife works, maybe she doesn't, but maybe your income is very important to your family. Well, what happens if you die? Well, they're in a lot of trouble. So in that circumstance, you definitely should have life insurance because you want to make sure that your family can continue on even if you're not there and they're not struggling. But it's also important not to confuse, let's say, a term life insurance that would be really good in that circumstance with whole life. Most people don't need whole life. I think it's a gimmick. It's overpriced. There's high commissions in it because your children aren't going to depend on you for the whole of life. They're only depending on you when they're young. I mean, if you die and your kids are in their 30s or their 40s, they can fend for themselves. It's only if you die and they're, 5, 10 little kids, and they still need to, grow up or maybe go through college. So there's only a period of time that you need the insurance. And then you want to maximize your death benefit. So if you use term life insurance, you could have a small monthly payment and get a much bigger death benefit. And then you could take, the money that you save by not buying an expensive whole life policy, and you can invest that. But if you don't have any kids, you don't have anybody depending on you, then you don't need insurance at all. You don't have to have any contingencies in case you die, because there's nobody depending on your income. And of course, even if you have, again, grown children and they have their own jobs, then they don't depend on your income either. So there's no point in buying insurance. I think a lot of people are overinsured. A lot of people buy insurance that they don't need. But then, of course, you got some people that need insurance and don't buy it. Okay. All right, let me try to name the people who are asking me these questions. Olinki Andre? Oh, this question is Olinki. Anyway, could you give us a few gold mining stock picks? I normally don't give individual stock recommendations on social media. The main reason for that is I'm still a licensed representative of FINRA, and they have these rules about know your customer, and you're only supposed to give investment recommendations that are suitable for the person who you're giving the recommendation to. So since I don't have any idea who's actually listening to this Q&A, I don't know the individual circumstances of everybody and whether or not a stock that I like is appropriate. So, rather than risk, these guys getting mad at me because they have a lot of power over me, unfortunately, I just decided a long time ago just not to give these out. And this is because, I actually got in trouble for it before. I got like, hey, you can't do this in an audit. And I'm like, all right, well, I won't do it anymore. So I don't really give out stock recommendations. Sometimes I talk about stocks that are in the news just to comment on them. And I always try to preface the comments by, hey, I'm not recommending it. Even if I say that I own the stock myself, I say, look, that's not a recommendation. I just am pointing out that I own it. But what I do tell people to do is look at my mutual fund, get a prospectus. You can download the prospectus on the website, and then you can decide for yourself if it's suitable once you've read about all the risks that are inherent in investing in gold mining stocks. But I think it's good anyway to have a diversified portfolio. Don't put all your eggs in one basket. There's a lot of gold stocks out there. They're not all going to make it, especially if you get into the juniors or exploration companies. So you have to have, a good portfolio. Yeah, maybe a few of them won't work out, but then you'll have a few that are, spectacular home runs. So if you have a diversified portfolio, you're going to make sure you get some of the great ones to offset the ones that don't work out. But yeah, my gold fund is the Euro Pacific Gold Fund, and you can get information on that on the EuroPac website. It's EuroPac or EPAC.com is the website for Euro Pacific Funds. EPAC Funds, EPAC Funds, FUNDS.com. Okay, Matt Zeta. All right, what about companies who are mandating vaccines for employees? See, I have no problem with a private company deciding that it wants to mandate that its employees have vaccines, because I believe in private property. I believe that a company is owned by the owners. If it's a public company, it's owned by the shareholders. If it's a small business, it's owned by an individual or a family. And if you own a business, you get to decide how you run your business. And that's why I think all of these laws, anti-discrimination laws, minimum wage laws, all these things are immoral and unconstitutional, because if I own a business, I get to decide who I want to hire and how much I want to pay. Now, of course, I can't force anybody to take a job. So if I'm not paying a high enough wage, I'm not going to get any workers. If I want to hire only women, that should be my prerogative. I mean, it's my business. I can run it any way I want. Now, maybe excluding men is going to put me at a disadvantage. Maybe I'm passing up on some really talented guys because for whatever reason, I just want to hire women. But that's my decision. It's my business, and I run the business the way I want. It's called private property, right? We have private property rights in America. Same way, if you have a house, it's up to you. You decide how you want to furnish that house. It's not, up to the government, what you want to put in your house. And they can't force you to allow people in. I mean, the government doesn't even try. If you want to discriminate against, your friends. If you only want to have certain types of friends, the government doesn't come in and force you to have a more diverse group of friends. Like, hey, you need to have more homosexual friends, you need to have more, female friends, or you need to have more African American friends. No, you can have all straight white male friends, and no one's going to say anything. But you want to open up a business and you decide, well, I'm just going to hire straight white guys. All of a sudden, hey, you can't do that. That's illegal. That's wrong, right? And so it may be bad business to do that, and maybe you won't stay in business if that's how you hire. But that's your prerogative. It's your business. You invest the money. You take the risk, and so you get to decide these things. And one of the decisions that a private business gets to make is, do I want to require my employees to have vaccines? And if they want to, then if employees want to work for that business, then they got to have vaccines. If they don't want to work for that business, then quit. Right? I don't want to get a vaccine. Go work for another company that doesn't mandate vaccines. I mean, that's a free market, right? I mean, businesses have all sorts of things that they compete with. I mean, you go and interview for a job, and some job has a certain benefit package, and you compare that to other packages, and a lot of other things. And so one thing to consider would be, hey, does this employer mandate vaccines? Now, there's going to be some people that like that. There's going to be some people that only want to work for a company that mandates vaccines because they want all their co-workers to be vaccinated. The best thing is choice. You want people to have choices. So business owners get to choose the policies that they want, and workers get to choose the job qualifications, or the pay, whatever type of job they want. They get to evaluate the entirety of what an employer is offering, and whether or not they want to work for a company that mandates vaccines or not. That's up to them. So this is free market choices. The government has no business getting involved in what private individuals decide to do. Now, when it comes to government, like if the post office or a government building, if they want to mandate it, well, that's fine, because that's the government, and they can do what they want with their property, even though technically it's taxpayer property. But when it comes to private enterprises, the companies make the call. And that's it. So I got no problem with it. Grant Williski, thoughts on the debt ceiling? Well, the debt ceiling is a farce because it's not an actual ceiling, because every time we get near it, we move it up. And in fact, it's not even there anymore. We suspended the ceiling. We actually have a lot more debt. We're actually looking down on that ceiling right now. The ceiling, I think, is still around 20 trillion or 20, I forget where, but we're, 28, almost 29 trillion. So we're way above the ceiling. So it didn't work. The idea was to have a debt ceiling to prevent the government from taking on too much debt. And clearly it did not work, right? You talk about the best laid plans of mice and men. This plan was a complete disaster because the ceiling proved not to be a ceiling at all, because Congress was given the ability to raise the ceiling. Now, if the ceiling was fixed and it could never be raised, well, then maybe it would have worked. But as it turns out, it was just a gimmick. And, Congress was easily able to get around the debt ceiling. It's interesting, though, I pointed out on my podcast, and if you guys are not listening to my podcast, you should do it at Schiff Radio. I pointed out that the origin of the debt ceiling was in 1917, a few years after the Federal Reserve started. They amended the Federal Reserve Act so that the Federal Reserve could buy U.S. Treasuries. It couldn't buy U.S. Treasuries initially. In fact, if it was able to buy U.S. Treasuries, the act probably never would have been passed. But, once they got the camel's nose under the tent, the rest is history. But as soon as World War I started, the government wanted to raise revenue for the war, and they wanted to borrow money, and they wanted to make it easier, so they wanted to let the Fed lend the U.S. government money. They weren't allowed to do that, so they amended the Federal Reserve Act. But of course, a lot of congressmen were worried that allowing the Federal Reserve to buy U.S. Treasuries would lead to bigger debts, and of course they were right. And so they decided to try to protect against that with a debt ceiling. What they actually should have done was never amended the Federal Reserve Act. You cannot, trust the fox to guard your hen house. So we never should have amended the Federal Reserve Act. In fact, we never should have gotten involved in World War I. Both of those were mistakes. We should have stayed out of World War I. We had no business being in World War I. And even though we won the war, we actually lost the war. Because of World War I, we ended up amending the Federal Reserve Act so that the Federal Reserve can buy U.S. Treasuries. And now look at the result. $28 trillion worth of debt, all this QE programs, everything that they've done, none of it would have been possible had we not entered the First World War. Now, of course, maybe they would have made the adjustment when we got into the Second World War. But of course, here's the irony. Had America never entered the First World War, there probably never would have been a Second World War, because there wouldn't have been a complete destruction of Germany. Germany and Britain would have come to a more even peace. There would have been no Treaty of Versailles. There probably never would have been a Nazi party or an Adolf Hitler. So you can go back and look at all these dominoes that fall down from making one little mistake. But we've been paying for those mistakes ever since. Let me go back here. Wash Chronicles is asking me about buying investment property now or wait for the dip. Look, again, all of this depends on the property, because properties, it's not necessarily a market. Each, piece of real estate is very unique and very individual. It's individual, and there are different circumstances. So there could be some very good opportunities right now. But then, of course, there's probably a lot of properties that are overpriced. So it's just, there's no one way to answer that question for everybody. Pimo Carminator. Why are all these names so weird? What are the chances that we go back on a gold standard? I think they're pretty much 100%. The only question is when. If you go back and look at the history of the world, for most of modern history, we've been on a gold standard. I mean, gold has served as money for thousands of years, and I think it will serve as money for thousands more. But there are periods of time where nations move away from gold, and they go to something like paper, and then there's a monetary crisis, the paper becomes worthless, and they go back to gold. What's different about what's happening now is you got the entire world that has moved away from gold. Not just one nation. You've got all the nations. So that's what's unique about this time period. But I think it's going to be the same as all the other time periods, in that all these fiat currencies are going to fail, and we will return to what works, and that's real honest money. And the best money we've ever come up with is gold. All right, so I got Julio Bonillo. How good am I at pool? I'm all right. It's not my best game. But I could use some more practice, but I enjoy the game. I'm better at ping pong, actually. I got a ping pong table in the other room. Let's see. So this is from Sinoli. Why not Peter for president? Well, there's a very simple answer to that question, and that's because I would lose, right? I'm not going to win. How am I going to become president? An election is an auction on the advanced sale of stolen goods. So I'm not promising to steal anything for anybody, so I'm not going to get a lot of votes. There's not a lot of people who want to vote for freedom, right? Because that's what I would promise. If I was going to run for office, I promise to leave you alone. And most people don't want to be left alone. They want something for nothing. And I have a hard time lying about stuff, so I wouldn't, make a good politician, because I would tell the truth. There's going to be some people that are going to vote for a politician that tells the truth, but not many. That's why politicians don't tell the truth. If you could be honest and be a successful politician, a lot more honest people would be in politics. The reason that there's so many liars is because the guys that are telling the truth are the ones that lose elections. The way you win elections and the way you get reelected is that you lie. And you're willing to do what's in the interest of a special interest who's backing you or funding your campaign, and you don't give a damn about the general interest of the country. You're not doing what's right for the country. You're doing what gets you reelected. And, so it's difficult for somebody that actually wants to do what's right for the country to get elected. Even if they get elected once, they probably won't stay in office because they'll lose, because somebody else will give the public what they want, or tell the public what they want to hear, or do what they need to do to get the special interest to back them and fund them, and then they end up winning. So yeah, it's not very likely that I would win an election, but it's more likely I can win over people. I can get people to reject a lot of these big government programs and move more toward free market, libertarian, conservative side of the political spectrum. I could probably win over people who would want to follow my investment strategy and invest, pursue, the way I'm investing my money. Because, people here, people are tuning into this Q&A. This is already a lot longer than, a bumper sticker or a 30-second, 60-second campaign ad. The things that I say don't necessarily work that well on a bumper sticker. And it's very easy, of course, for politicians to attack what I believe in sound bites, because Peter Schiff wants to take away this, or he wants to deny you that. And yeah, I want to take away what the government gives you, but I want to give back what the government took from you. And that's your freedom, your liberty, your self-respect, and your prosperity. But explaining that takes a long time. And it doesn't take a long time to try to vilify somebody who wants to restore freedom, because you can't restore freedom without taking away all these programs. But what the politicians don't tell you is the programs cost a lot more than the value that you get. So what you get from government, it actually costs you a lot more. What you lose exceeds what you get, except you don't understand what you lost. The government always takes credit for what they give you, but they never accept responsibility for what they take away from you. Next one is Kevin Hadaden. Do I believe in tax credits for startups? Well, no. I don't even believe in income taxes. I think we should have no income taxes. I think it's a horrible, economically destructive tax. I think it's violative of so many parts of the Constitution. I think it's immoral, illegal. To the extent that the government taxes us, and governments need to tax us because they have to pay for the cost of government, but the legitimate functions of government should be paid for with user taxes, sales taxes, VAT taxes, import duties, stuff like that, not the income tax. So to say that the government should provide an income tax and then give you a credit for starting a business, I don't want the government to get involved in the economy to that degree. I don't want them picking winners and losers, taxing some people, subsidizing others. The government should stay out of it. Felix DeBall. How soon until the dollar crashes? Again, I don't know. I think it's going to crash, but I think it's going to go down. Again, like Bitcoin, I think the dollar is going to lose value slowly before it loses it rapidly. And I'm not even sure when this next round of deterioration really is going to kick in. I would think it's pretty soon, because the dollar has been getting some support based on the false idea that the Fed is going to tighten monetary policy first through a taper of its QE program, and then once it finishes tapering QE and it's no longer doing QE, that it will start raising interest rates. And so all of this has been factored into the dollar. I think all this is going to get unwound when the Fed is incapable of completing the taper mission, if it even starts the taper mission. Rates are never going to lift off from zero. In fact, we're going to go back to an even bigger round of QE, even if we start to taper this one. And I think this next easing cycle is going to be huge, and the markets are going to realize that they priced in the wrong outcome. And then we're really going to start to see the dollar depreciating against other fiat currencies. You'll start to see gold really moving up. And then at some point, I think the dollar's orderly decline will turn into a disorderly crash, at which point the Fed is going to have to do something to prevent the dollar from, going to zero. And so I think it will do something at that time, and then we're going to have a massive implosion economically when that happens, because it's like slamming on the brakes. Interest rates are going to skyrocket, and markets will crash, and a lot of bad stuff's going to happen. Of course, if they don't do that, even worse stuff is going to happen. Anyway, Josh Myers wants me to define inflation. Well, when it comes to economics, inflation means to expand the supply of money and credit, right? You are inflating the supply, just like you inflate a balloon with air. You inflate an economy with money. You expand the supply of money and credit. And when you do that, now there's more money available to buy stuff, and you end up bidding up prices. And so when you create inflation, the result is that prices go up. Now, sometimes they don't go up because maybe prices were going to decline by 10%, and the government creates inflation, and so they only decline by 2%. Well, prices are 8% higher because the government inflated the money supply than the prices would have been had they left the money supply alone. So in other words, I would have got 10% off. I would have been able to buy goods and services 10% cheaper. I only got to buy them 2% cheaper. That 8% is what I lost due to inflation, and it's what the government gained. And the way the government gains it is the government gets to print money and then spend it, right? So it gets to buy stuff with the money it prints. But that means the money I have buys less. So I buy less stuff, so whoever got that newly printed money from government could buy more stuff. It's the same thing as if the government taxes me, because the government can take that money away from me and give it to somebody else, and now they can buy the stuff that I can no longer afford. But if they don't want to do that, because politically I might be mad if the government takes my money, well, they just print up the money and they give it out to somebody, and then prices go up. And I'm not as mad at the government because I don't know it's the government's fault. In fact, the government tells me it's my fault. The government says, oh, there's inflation because, consumers are greedy and businesses are greedy and everybody, is expecting inflation and they're jacking up prices and demanding higher wages, right? The government always blames the public for the inflation that it creates. But inflation is a tax. It's just a very evil tax because it's secret, and a lot of people don't even realize that what they're paying is a tax, but that's what's going on. Our next question from Damn GAF, whoever. Are China stocks a buy at the latest dip? They probably are. That doesn't mean that the dip is not going to get bigger. And if it does, they would be an even better buy. Whenever you start to see a big sell-off where people are worried about something, and there's certainly a lot of worries about China and Chinese names, and those risks may even increase and those worries may even get bigger. But that's the environment you want to look at for finding bargains, right? If you want to find a bargain, then there's going to be problems, right? You're not going to find bargains where everything is great, because then all the prices reflect that, right? If everything is good and investors are optimistic, that's going to be reflected in the price. So you're not going to get a cheap price, in an environment where everything is great and everybody is happy. But where there's some risk, where there's problems and people are worried and people are selling, that's when you're going to find bargains. You just have to understand that, the first bargain is probably not going to be the best bargain. Maybe the bargains will get even bigger and bigger. But you know what? You can't wait for the absolute bottom, because the chances are you'll miss it. And then the next thing you know, the price will be much higher. So when you see a big decline and you look through, you know what you're doing, you can buy a little bit, and then if it goes down, you buy a little bit more, and you build a position over time. So when the market really turns around, you've positioned yourself for that, and you can end up, with a good profit because you bought, what was out of favor. It's like the Berard Baruch, I think his old saying was, you buy straw hats in winter, right, when nobody wants them, and then you sell them in summer when people want them. And so it's certainly winter in some of these Chinese names, and the winter could get a lot colder. I'm not saying that the bottom is in for a lot of these stocks, but yes, this is where you should be looking. And of course, you got to have a stomach for risk whenever you're in the equity markets. But don't look at these markets unless you have money to risk. Let's see, Alexander Phoenix. How many stocks should one have in a portfolio? There's no set rule. He's saying maybe 15 to 20. Look, some people say sometimes you can have too many stocks because you can't monitor them. Look, we've got in my mutual funds probably about 30 different stocks in a fund. but I got 4 portfolio managers helping me manage the portfolio. So we got a lot of eyes on these stocks, and we try to get the stocks to work together as a team. But sometimes people just they find some really, really good ideas, and they just want to just completely concentrate on those ideas, and that can work out well if you're right in your research and things turn out the way you expect. But there's a lot of stocks out there. I mean, there are thousands and thousands of stocks. So if you whittle it down to 20 or 30 stocks, you're still only concentrating on a relatively small portion. And we look at a lot of stocks that we don't own. So you can look at a portfolio that I'm managing, and you see, the stocks that are in there. We're following a lot of stocks that aren't in there because we're looking at stocks that we might like to buy, but maybe the price is too high. We don't want to buy them yet. We want to wait for the price to come down, or different things. Or maybe the company's having a lot of problems and we think it's a little early. We want to see some kind of catalyst, that we think maybe the situation has turned around a little bit before we start wading in. There are a lot of different things, but we look at a lot of stocks that are not in the portfolio to decide, because we're always thinking, hey, maybe there's, something better than what we got. Maybe we want to substitute one of our stocks for a different stock. Sono, is Black Swan around the corner? Well, some of these black swans aren't actually black. They're pretty white. It's just that a lot of people just don't notice them. But as far as when a black swan is going to show up, that's the whole nature of a black swan, right? You don't know because they're very rare, and eventually though one will pop up. So I'm sure there are some, but to me, I'm not worried about the black swans. I mean, I think I pretty much know what's going to take down the market, the economy, the dollar. Maybe people will call it a black swan when it happens, but technically that's really not what's going on. J.M. Murphy 3, how could government incentivize bringing manufacturing back to the United States? Well, we don't have to incentivize manufacturing to come back. We have to stop incentivizing them to leave. That is the problem, right? Everything that we're doing is forcing them to go. So if we stop doing all the things that are resulting in manufacturers leaving the United States, slowly they may start coming back. And so what we need is an environment where we have much fewer regulations and lower taxes. But in order to have that environment, we need a much smaller government. So we're going to have to start cutting a lot of government spending so we can relieve corporations and individuals of the burden of paying for all that spending. And of course, we have to have politicians and government that is more accepting of the free market and is willing to allow markets to regulate business rather than government. I think the free market does a much better job of regulating conduct and behavior and risk-taking and stuff like that than government bureaucrats. But, we'd have to completely change that. And unfortunately, we're going in the opposite direction. American politicians now distrust capitalism more than ever. They put their faith in government and in politicians. And so I don't see anything happening that's going to really bring back U.S. manufacturing. Look, Donald Trump talked about it. He kept saying all the manufacturing was coming back, but that was never true. That was all a lie. I mean, the manufacturers didn't come back. And they're still leaving. That's the problem. They were leaving under Trump, and they're leaving under Biden, and they were leaving before Trump, and they're going to continue to leave. I mean, that's one of the reasons that our trade deficit is at all-time record highs, because we're importing more than ever because we're producing less than ever as a percentage of what we consume. Let's see. Z, thoughts on non-business owners that like their career but need to hedge the Fed. Not really sure what you mean by that. But if if you are a policeman or a fireman and you want to hedge, you need to invest in foreign stocks like I'm doing, or gold stocks. I mean, chances are if you're a policeman or a fireman, you got a big pension. I mean, that's one of the reasons these jobs are pretty lucrative, right? They're very, very good pensions for policemen, firemen. And of course, the pensions are only as good as the dollar because that's what they're denominated in. Now, of course, a lot of these pensions too, the local governments that made these promises ultimately may not be able to fulfill the promise because they don't have the resources to make good on these pension obligations. Now, maybe the U.S. government will bail them out. I don't know. But my thinking is that regardless, if you end up getting paid your pension, it's going to be in money that doesn't buy you very much. So you need to hedge those pensions by investing what you have outside of those pensions, outside the dollar, right? Foreign stocks, precious metals, look at my mutual funds, talk to some of the representatives at Euro Pacific Capital about the types of portfolios that we can create for you that will hedge you against inflation. AR Xing, do you like buying leap options on gold stocks? Well, I don't buy options really, because when you're buying an option, you're gambling on something happening within a certain time period. And it's very tricky, figuring out the time periods. And you pay a premium, and generally, you've got the right to buy something at a higher price than what you could just buy it for right now. And, in order to make money in options, you got to be right on a lot of things, in particular the timing. And the move has to be big enough so that you make money on the option. I would rather just buy what I think is going up, because then I only have to be right on the direction. I don't have to be right on the magnitude. I don't have to be right on how long it takes. As long as it goes up, I'm going to make money. You can buy a call option on a stock and it can go up, but not quite enough, and you lose all your money. It goes up, but not enough to hit the strike price, or it goes up a lot, but not quick enough. It doesn't go up before your option expires. And so there's a lot of moving parts there. Usually the best way to make money in options is to sell them, is to be the guy that sells the option and takes in the premium. It's like in a casino in Vegas, you're the house, right? The house wins, not the people that are gambling. So the best thing to do in Vegas is to own the casino, right? And you make the money. So the casino owners, when it comes to options, are the people who sell them. 90% of options that are bought expire worthless. That means that 90% of the people who sold an option get to keep all the premium money. So that's a pretty good odds and a pretty good business. Okay, Bon Jenke. What about the housing bubble? Is it going to pop? Well, again, housing prices are high, and I do think it's a bubble. But everything almost is in a bubble. I mean, housing isn't unique. And I think all of it is the result of what the Fed is doing with inflation. And so, what will happen to housing prices depends on whether or not the Federal Reserve actually does something to reverse course. If they actually let interest rates go as high as they should, they really tighten monetary policy in a very aggressive way, all these bubbles are going to pop. But if they don't, then they'll never pop, right? Because they're not really bubbles. It's because it's the dollar that's going down, not real estate or stocks that are going up. And the dollar can go way down. Now, in terms of gold, I think you will see that. I mean, I think it's clear to me that most real estate prices are expensive in terms of gold. And so I do think that the gold price of real estate is coming down, even if the dollar price of real estate continues to go up. Okay, Top Ramen. Obviously, these are not names. I don't know, these are some kind of Instagram handles. When a company like Apple or Tesla has factories in China, how are their exports reflected in trade? Well, if a company has a factory in another country and it has to import the products from that other country, then those imports are scored as imports, right? Even if an American company owns the factory, the bringing the goods in here still counts as an import. Of course, then there's a lot of value added in the U.S. that wouldn't be scored as an import. But remember, the same thing applies when the Japanese own a factory over here. And if something goes back to Japan, that gets counted in our exports. So we get credit for the stuff that we make, but we don't get credit for the stuff that we don't make, even if we own the facility, because the labor is taking place in the other country. The wages are being paid in the other country. So it is an import if we're bringing it in, regardless of the owner of that particular factory. Ramen 26. If you know the company you're investing in performs well enough, what's the advantage in diversifying? Well, again, if you were perfect and never made a mistake, well, maybe there wouldn't be. If you can always figure out which stock is going to do the best, then you would just buy that one, right? But we don't know that. Things can happen that we don't expect. Things can go wrong, right? The best laid plan is due to poor connection. I don't know, maybe I'm back. So yeah, we're all human. None of us have a crystal ball. And so it makes sense, to have a few companies or more than a few, because some of them will work out as well as you expect. Maybe some will work out even better. And then of course some won't work out at all and you'll end up losing money. But you don't know that. Most of us, don't know that going in. So we're going to diversify because we're human. It's bad connection. I don't know. Ronnie the limo driver. Did Art Laffer ever send you a penny? No. Art Laffer welched on that bet. In fact, I saw him claim on some show that he didn't even lose because there was no time limit. Although there was no time limit on the bet or something. But it's clear that he lost the bet. We made it in 2006, and he said that everything is great. There's no recession anywhere in sight. And the recession started in 2007, and it was the worst one since the Great Depression. So I think it's pretty clear. You can see the entire bet. It's a 10-minute segment from Kudlow's show on CNBC, although Larry had the day off, so he wasn't the host. But it was me versus Laffer, and you can see the bet. And yeah, I think maybe it was on the Daily Show where he tried to weasel out of admitting that he lost, but he admitted he never paid me the penny. Yeah, he admitted he never paid me. But more important than the penny, that was only part of the bet. The rest of the bet was a note. The loser was supposed to write a note to the winner, acknowledging that they lost and congratulating the winner. I never got that note. That would be maybe a valuable piece of memorabilia if Art Laffer just wrote the note. But he welched on even that bet. Because obviously it doesn't cost him anything to write me a note. But he wouldn't even pay that, right? So he's a big welcher on that bet. Okay, Paul Saunders. What are some of the unseen negatives of government involvement in education? Well, it's not that they're unseen. We can see all the negatives. It's a complete disaster. You got kids graduating high school that are functionally illiterate. You go to a lot of universities, they have remedial classes in English and mathematics. How you taking remedial math if you're a high school graduate? It's a complete disaster. Government schools, are terrible. Look, the government doesn't do anything well. Look at the post office. Nothing the government does, it does well. That's the nature of government. That's why we don't want the government to do a lot of stuff. You think the army is efficient? No, of course not. They're very inefficient. And so we get lousy schools because of government. Because government schools, who do the schools care about? Do they care about the students? No, they couldn't give a damn about the students. They care about the bureaucracy. They care about the administrators. They care about the teachers, right? They just want to make money. They don't give a damn about the students. Why should they? There's no competition, right? You're stuck. It's a government school. If you want good education, if you want educators that give a damn about their customers, then you need free market capitalism. The beauty of capitalism, goes back to Adam Smith's invisible hand. Let's say I'm just a greedy bastard and I just want to make a bunch of money, right? I own a business. How am I going to make a bunch of money as the owner of a business? Well, I got to get customers. How am I going to get customers? Well, I got to figure out what they want, and I got to give it to them. I got to make a product that will improve their lives and sell it to them at a price that they think is a good deal, right? And so that's how I get rich. And so even though I don't give a damn about my customers, if I want to get rich, I better serve my customers, and I better do what's in my customers' interest. Even if I couldn't give a damn about my customers, if I just care about myself, the only way I'm going to enrich myself is by enriching everybody who does business with me, or they won't choose to do business with me. The same thing will happen with education. If I open up a private school, how am I going to get customers? How am I going to get parents to enroll their kids in my school? Well, I'm going to give them a good education, a quality education for the money. It's going to be affordable, right? I'm going to have to keep my costs down and my quality up. Otherwise, parents will send their kids to another school. See, public schools don't have any of these considerations. They're in there. It's a public school system. They got a monopoly. Doesn't matter how lousy the school is, the kids are going to go there. And this is particularly a problem for people that live in the inner cities, lower income people, because if you're upper income, you can reject government schools and you can send your kid to private schools. But if you don't have the money for private schools because you're also being taxed to subsidize government schools, and of course, if there were no government schools, private schools would be a lot cheaper. There'd be more of them and the cost would be lower. And you know, there's nothing about education in the Constitution. You read the Constitution, the word education is not there. The word school is not there. It's not like they didn't have schools back when, they founded the country. They did. They just were private. It was not something that the founding fathers ever envisioned the federal government getting involved in. And now the federal government is highly involved, and now they want to make it even more involved in education. Before the government got involved, a high school diploma was actually worth something. I mean, before the federal government got involved, you had local government, but before the federal government really got involved, high school diplomas had value. Now they're worthless. They mean nothing. Now you got to go to college. And now that they've rendered a college degree worthless, now you got to go to graduate school. Right? Meanwhile, not only is a college degree practically worthless, it's very expensive. Before the government got involved, the degree had value and it didn't cost you nearly as much to get it. So none of this stuff is unseen. The disaster in education is plain for everybody to see. It's just that nobody wants to recognize it. Okay, this Argus actor, when are you going to release Peter Schiff on Ball Street? Okay, so that is a reference to a joke that I made in my one attempt at stand-up comedy. If you want to see it, go to my YouTube channel and Google Peter Schiff or search Peter Schiff stand-up, and you'll see the joke about Peter Schiff and Ball Street at the end of that stand-up skit. Spencer Trude, why don't gold miners hoard gold instead of selling it? Well, the reason is they have bills to pay, right? They got to pay their workers, they got to pay, royalties or concessions and taxes, and they got to buy energy and all sorts of things. So these are operating companies. They can't just, produce gold and just hold on to it because then they won't be able to cover their costs. But there are a lot of gold mining companies that if their income exceeds their costs, some of them decide to hold some of their gold instead of cash on their balance sheets just to hold on to it. So they do that. But in most cases, they're operating businesses and they also pay dividends. And most of the shareholders, they want to get a dividend. So, they got to sell the gold to get the cash to pay the dividend. So they're operating companies. But, as far as I'm concerned, it'd be fine if some of these companies paid their dividends in gold. I mean, they could do it. They could, partner up with a company like Gold Money and they could just, basically deposit bullion and pay dividends in, electronic receipts for gold. Or there could be a cryptocurrency backed by gold that they could use to pay dividends in gold. And then the shareholders could decide when they get the gold, do they want to keep it or do they want to sell it? But of course, right now, what you can do is you have a gold mining company that pays you a dividend. If you want, you can go buy gold with your dividend if you want to get back into the gold. But the key on these gold mines is what they mine in any one year is a small percentage of what they still own in the ground. So these gold mining companies, even though they're selling today's production, they're not hedging right now. They're not selling tomorrow's production. So if the price of gold goes way up, the value of all that gold that they haven't mined goes way up. And here's the real kicker. This is where, you're going to get the big bang on these gold stocks if I'm right. Because reserves have to be assigned a value. And that value is a function of the cost to mine, because some reserves are difficult to mine and it takes a lot of money. So let's say I'm a gold company and I've got a certain, ore body, and it's going to cost me $2,000 an ounce to actually get that gold out of the ground. Maybe I got a lot of gold there, but it's going to cost me $2,000 an ounce. Well, what's that gold worth? Well, it's not worth anything, because if gold is $1,800 an ounce and it's going to cost me $2,000 an ounce to get the gold out of the ground, it doesn't matter how much I have, I'm losing $200 an ounce. So the market's not assigning any value to that deposit. Now, let's say gold is $3,000 an ounce, and maybe the cost of mining goes up to $2,200. All of a sudden, I got $800 an ounce profit. Well, that might be a lot of money, especially if it's a big, deposit. So all of a sudden, gold reserves that have no value can have a huge value on an increase in the price of gold. And that's really what you're getting. That's the real leverage that you get when you own these gold mining companies. All right, Natalie Brunel. If we tapered and moved back to sound money, how long would it take the market to correct? Well, tapering and moving back to sound money, well, that's, they're miles and miles apart. Even if we taper, we ain't going back to sound money. All they're doing with the taper is they're printing less money than they're printing now, right? Instead of doing 120 billion a month, they do 100 billion a month or 80 billion a month. So they're still going to be running the printing presses. They're just going to dial it down a notch if they taper, and only temporarily. Because even if they taper, what happens when the economy weakens? What happens when the stock market weakens? Well, they reverse the taper. We already know they're going to do that. It's not like they've got some mystery playbook. We've seen their playbook. They use the same one every time. D. Brick. What do you think about paying for order flow? Look, as long as it's disclosed, it's fine. Look, that's the trade-off that a lot of people make. You've got these firms that are saying, hey, we'll give you free commissions. You can trade for free. Well, nothing's for free. There's always got to be a catch. Businesses aren't in business to give away products, although today, in some cases, they are, because they just want to get sales so they can go public and sell stock, and that's part of this massive stock market bubble. But in general, you're not going to get something for free. And so if they're going to let you trade for free, they got to have a way of making money off those trades. Otherwise, they don't have a viable business. And so one way is to pay for the order flow. Now, if you don't care about that, and, then, go ahead and do it. Especially if you're not trading a lot. If you're not a day trader, you're just buying a position and you're holding it. Even if you get a slightly worse fill, probably not going to make that big a deal, in the scheme of things. But if you're trading a lot, it could add up. If you're just getting slightly less execution and you're trading and trading and trading, it may be cheaper to pay the commission than to get a free commission and have your orders routed in a way where you're not getting as favorable a price. Next one is thoughts on Cathie Wood. This is Ryan Garzone. Thoughts on Cathie Wood saying we'll have deflation due to high innovation. But first of all, Cathie Woods doesn't understand what deflation is or inflation. But she's correct in that, sure, because of technology and improvements in efficiencies that come over time and that have been with us, for centuries, things get cheaper. That is the natural consequence of capitalism. goods and services become cheaper to provide. And that's how living standards rise, because I can afford to buy more things when the price goes down, right? I mean, how many people could afford to buy the first automobile? Hardly anybody. They were just playthings for the rich. Now, every middle-class family in America probably has 2 cars. How many people could afford the first television set? Well, again, they were playthings of the rich. Hardly anybody had the first television set, and of course, there was nothing to watch. You had like one channel. It was on for 2 hours a day, and it was a 1-inch screen, and it was in black and white. So even if you bought it, it was like, the first TVs was like buying a car, on relative terms. But rich people bought them. Now everybody has flat screen TVs, all over in every room in their house. That's technology. That's capitalism that was able to do that. How many people bought the first cell phone? Very few. They were toys for the rich. You'd show off to your friends that you had this big block, this cell phone. And again, now they give them away, right? You get them free sometimes. So everybody's got them. Price came down. Capitalism did that, right? That's what's supposed to happen to prices. They're supposed to come down. Now the government screws it up in a lot of other industries, and so you can't see the benefit of falling prices because the government robs us of that benefit by creating inflation. And the government's creating a lot of inflation. And even though Kathy Wood will be right with respect to the tech industry's ability to lower prices, that is going to be dwarfed by the government's ability to force them up by creating inflation. And so to think that we're going to have general deflation, which the way she would define it would be a falling CPI, there's no way that's going to happen. Prices are going way up, and they're going to go up higher in the future than they have in the past. I think Kathy Wood is very overrated. She just happens to be in the right place at the right time. I mean, she's in a bubble, and she's the captain of, a ship that's riding this wave. She's in the most risky stocks, the ones that have the most air in them, the ones that have benefited the most from the bubble. And so she looks like a genius because she's in those stocks. Well, she's not going to look so smart when the bubble pops and these stocks come crashing down. Jonathan, USA 1, is the ECB more or less competent than the Fed? I don't know. It's a tough call. I mean, they're both incompetent. All these central bankers are cut from the same cloth. So it's a tough question. But see, the difference is that America is more dependent on the dollar and its international appeal than the Eurozone is the euro. That's the big difference. I mean, the European community, if you look at the Eurozone in its entirety, their trade is pretty much in balance. I mean, they don't have a big deficit the way we do. So they don't depend on imports. They're relatively balanced, and so it's America that is more dependent. And so in that respect, it's the Fed that's probably more incompetent because it doesn't really understand the value of this giant subsidy that the world is getting us, or it wouldn't be so cavalier in its policies, because we're going to lose that privilege, and there's going to be a massive economic implosion as a result. Jack Ion, will WTI crude break to the upside soon? Well, I think it's going a lot higher. I mean, it pulled back. I actually thought earlier in the year that it might already be at $80 or higher, and it's clearly not there. Again, a lot of this is because of the idea that the Fed's going to taper and then raise rates, and that's been supportive of the dollar, and so that's kind of kept the lid on crude. So I think when all this reverses and the dollar starts to weaken, you'll see a big move up in crude and other commodities also that have corrected from their highs. Yasif Hurley, how do you think vaccine passports will affect the economy? Well, obviously, there's always going to be a lot of people that don't want to take the vaccines, and to the extent that they're, less involved in the economy as a result of, them not having the vaccine. I mean, that's going to have an impact. I think what will also have an impact is all the manpower and all the resources that we have to waste on the passports themselves. and on checking everybody for passports. And of course, there's going to be a lot of fake passports. I mean, it's pretty easy to dummy one up. I mean, when I was a kid, everybody had fake IDs to go out to a bar. I mean, it's a lot harder to fake a driver's license with a picture on it. I mean, anybody could just cut out a piece of cardboard and write up a vaccine, thing. And so there's going to be a lot of money wasted, checking all these IDs and going after the fraud. And so none of this is going to be good for the economy. Just like, after September 11th, we had to waste all this money on more security. I mean, before September 11th, if I went to an office building, in the city, I just went to the elevator, rang the bell, and went up there. Now you go in, you wait in the line, you go to security, you got to take out your ID, they take a picture of you, they give you a pass, you got to put the pass in some kind of security. I mean, all this stuff costs money. And all this money that we're spending on added security is money that we couldn't spend on other things that we would have valued more, but now we're forced to spend it on security. So to the extent we have to waste a lot of resources enforcing these vaccine passports and making sure everybody has one just to go, to a gym or a restaurant, it's just going to run up the cost of doing business, and it's going to undermine the economy. Jonathan, USA, do you think companies like BlackRock that are in bed with the Fed should be speculating on housing? Well, look, they shouldn't be in bed with the Fed. That's the problem. But the government shouldn't be telling a private company what they can't speculate on. They should be able to speculate on whatever they want. The problem I have is with the Fed. I don't even think the Fed should exist. But I certainly don't want the government just doing what the Fed is doing. I don't want anybody doing what the Fed is doing, because the Fed is doing harm. And in fact, if the government was given the power of the Fed directly, they'd probably do even more harm. But the solution is not to have more regulations. It's to have, a free market in money, and not have any bailouts, and not have, influence in Washington, be able to pay off in any way. We want to take the power away from Washington and from the Fed. So there is no advantage gained, from being in bed with anybody. All right. Javella James, why do you think China has yet to demand payment from the U.S. for its debts to China? Well, they're holding on to our U.S. treasuries and other debts. They could cash them out whenever they want. I don't know why they don't. I know they're not loaning us nearly as much money as they used to, but they're still holding on to a lot of U.S. treasuries, mortgage-backed securities. I don't know why. They should get rid of them. That's what I would do if I was the Chinese. But the Chinese do a lot of things that I would advise against. So holding a lot of U.S. dollars is one of them. But they're not holding as many as they used to in relation to their economy. And they're not a big lender anymore to the United States government, which is why the Fed is printing as many as it is and so active in the bond market, is because we're not getting the type of help from the Chinese that we got in the past. And eventually, that everybody's going to be selling our bonds. The question is, what will they get for them, and what will the dollar be worth? That I don't know, but I think it'll be worth a lot less. Samini Irani, I don't know, just forget this name. Is the U.S. headed towards a civil war? I hope not. But I don't know. What year, when? Are we headed for one this year? I don't think so. But obviously, we could have a civil war at some point. I do think that things are going to get pretty bad in the United States economically. Much worse than they've been in the past. And I think in that environment, there could be a lot of pressure. I think a lot of states, take a Texas, for example, may want to secede from the union, and obviously we had states try to secede in the past and we had a civil war. Would there be another civil war if we had a state or a group of states that tried to do the same thing again? There may be a lot of political pressure to do that. And so you never know. And maybe the United States will break apart peacefully. Maybe there won't be a war. I don't know. But anything is possible. Stuff is going on. I think that is the trend. I think even though you had the European Union come together, I think you have more, examples now of countries that are splitting up into multiple countries. And so who's to say that the United States, we have 50 states, we may not have 50 states in the future. And hopefully if states leave, there won't be a war. But the problem is, if one state is allowed to leave, then it's going to be like dominoes, because who the hell is going to want to stay? Everyone's going to want to get out from under their share of the national debt, right? Because the U.S. is in so much debt, why would you want to stay? That's why, it never made sense to me for a lot of other reasons. But I live in Puerto Rico. Why on earth Puerto Rico would want to be a state is beyond me, because then Puerto Ricans inherit their share of the national debt. I don't know what it is, 50, 75,000, 100 grand per person. Why would they want to take on that burden? Right now they really don't, because we don't pay federal income taxes here in Puerto Rico. So if they have to jack up income taxes to cover the debt, they're not getting the money from the Puerto Ricans, but they're going to get it from the residents of all the other states. So, it doesn't make any sense to want to join a country that's so highly indebted, and now you are burdened with a share of that debt. What I think is more likely in the future is that people are going to want to get out, especially as taxes get higher and higher and higher. A lot of states, there's going to be a lot of pressure. What are we doing in America? Why don't we just leave, and then we won't have to deal with these high taxes? So, we'll see. Trevor 813, do bond vigilantes exist anymore? Not really. I think the Federal Reserve pretty much killed them all. Because, in order to be a bond vigilante, it's got to be your own money. If the Fed is buying all the bonds, they don't give a damn about how much inflation there is or how much the value of the dollar is losing. They can print as many dollars as they want. You need private buyers in the bond market to be worried about inflation and to be worried about a loss of purchasing power. So since the government is so involved in the markets right now, it really destroyed the vigilantes. And we want them to keep the government honest, but without them, it's easier for the government to behave in a dishonest way, which is what it's doing. But we'll see. Maybe they're not completely dead. Maybe they'll be resurrected at some point. And I think it's more likely, though, it's going to come from abroad. It's not really the vigilantes. It's just going to be the larger foreign holders. Central banks are just going to dump their dollars at some point. They're just going to get tired of holding them and watching them deteriorate. They're just going to try to get out and take what they can, cut their losses, and move on. Chris Audino Realtor, where do you see the 30-year Treasury heading? Well, eventually the yields are going to go way up. There's no question about that. I just don't know when. They're at record lows or near record lows. They should be much higher. The only reason they're not is because of artificial manipulation. So the government can't manipulate yields forever. At some point, the market is going to overrun this manipulation, and rates are going to go up. But obviously there's been a lot of people that have tried to bet that they were going to go up, and in general those bets have been losers. It's the people who have bet that rates would continue to go down or stay low that have been making money. But eventually that's going to reverse, and I have a feeling that it will be a function of the dollar, because once the dollar really starts to collapse, that's going to put pressure on bonds, because all bonds are future payments of dollars. And so if the dollar is really going down, people are not going to want to be paid dollars in the future, because they're not going to know what value they'll have in the future. And that's going to put even more pressure on the Fed to print even more dollars, to buy even more bonds, which accelerates the inflationary cycle, which drives even more people to want to get rid of the bonds that the Fed is printing money to buy. So as long as people want dollars, the Fed can get away with printing them. When they wise up and they don't want them anymore, the game comes to an end. Okay, somebody's asking me if I am Satoshi. I wish I was Satoshi, because I would be sitting on a pile of Bitcoin. I probably would have been selling my Bitcoin for years, but I'd still have more to sell. So I'd be very, very rich if I was Satoshi, but I'm definitely not Satoshi, just in case. Although if I was Satoshi, I probably would not admit it, I guess. Because I would have admitted it a long time ago, I guess. Do you think the USA wants to go to war again in Afghanistan so they can print more money with an excuse? Well, it doesn't seem like they need an excuse to print more money. I mean, they got plenty of excuses, so I don't think they need a war. I mean, sometimes politicians have used wars as an excuse, as a distraction, but, I don't think that would happen. I think to the extent that we end up having to send more troops into Afghanistan, it's not going to be something that Biden wanted to do. I think it's going to be something that he maybe feels that he's backed himself into a corner and he has no choice but to do it. But I don't think that's the plan. They're going to print a lot of money. They don't need war as an excuse. They have plenty of other reasons that they can come up with. But if we do end up having to spend a lot more money getting involved all over again in Afghanistan, it's only another negative. It's just another nail in the dollar's coffin. And America's prestige has already taken a significant hit based on this huge, colossal blunder, which, by the way, Biden is now trying to, blame it all on Trump. And, I wasn't a big Trump backer, even though I voted for him. And, I don't regret voting for him over Hillary Clinton. But he was disappointing in that he could have been a much better president than he was, because he could have taken advantage of his opportunity, his 4 years, to cut government spending instead of make government bigger. He spent more on welfare, he spent more on warfare, he created the Space Force. I mean, he was a big cheerleader for money printing and QE and negative interest rates. So he was a populist, and that's not what we needed. We needed a real statesman to come in there and do what career politicians wouldn't do. Instead, he did what every career politician does, and he just did more of it. But he just wasn't able to get reelected. But one place he didn't make any serious mistakes was in foreign policy. And I think this fiasco is all Biden. I don't think it's the fault of the Trump administration. And I think had Trump been reelected, this would not be taking place. Let's see. So Matt on Insta, who's worse, Pomp or Powell? Well, I mean, Powell's doing a lot more damage than Pomp. I mean, the only damage that Pomp is doing is to the extent that he's convincing people to buy Bitcoin. They're going to lose money. But in the scheme of things, that's not nearly as much damage as the Federal Reserve is doing. In fact, a lot more people are going to lose a lot more wealth as a result of Powell than they are as a result of Pomp. Not that people won't lose money if they're following Pomp's advice. I'm pretty sure that they will. Although there are people that followed his advice. If they followed it years ago, they have the opportunity to make money. But, Pomp will, try to talk you out of making money. He'll say, no, hold on, stay with it, right? It's going higher. So I think in the end, even if you're making money on paper because you followed Pomp's advice, if you keep following his advice, you're going to lose those profits back. But you know what? If he was Fed chairman, he'd probably do a better job than Powell. So I guess I would rather see Pomp as Fed chairman than Powell, even with his views on Bitcoin. All right, let's see. Enzo Romano, you said in many interviews China is more capitalist than the U.S. Can you explain? Yeah, although China is becoming less capitalist now with some of the stuff they're doing. It's kind of like they're following our lead to the left. They're kind of emulating some negative aspects of modern American capitalism, which is really, capitalism, or it's not really capitalism, it's phony capitalism. China should be looking to America of the 19th century, not the 21st century. But what I mean by that is that in a lot of aspects of Chinese life, the Chinese government is actually less involved than the U.S. government. Meaning, like, if you're just a 20-year-old kid in China, you want to start a business, you are going to encounter fewer rules and regulations than the same kid in the United States. And so the Chinese, in many respects, are a lot freer in their transactions. Not all respects. I mean, clearly there are some areas where the Chinese government is more involved in the economy and with individual affairs than in the United States. But there are other areas where they're less involved, and that's unfortunate. I mean, we should be freer than the Chinese in all aspects of our lives, but we're not. And that's why China has been successful. It's to the degree to which they've embraced capitalism that they've been successful. The fact that they've still held on to some remnants of socialism, that's what's holding them back. But one of the problems that they don't have is that they're not a democracy. I mean, democracy is very overrated, right? Voting is not a big deal, right? Just because you could vote, that doesn't mean anything. I mean, you have two idiots you could vote for. You know, it's like you could vote for, you have two people who are going to oppress you, and you have a choice. I could vote for oppressor A, or I could vote for oppressor B. You know, what kind of freedom is that? I'd rather be free, but not be able to vote, but know that the people in charge are not oppressing me. And so what is key to prosperity is not democracy. In fact, in many cases, democracy is a roadblock to prosperity. What you need is free market capitalism. And if you can achieve that better, you know, with a monarchy or, you know, something like that, or some other form of government, that's fine. And in fact, the founding fathers, when they created America, they established a republic. And they hoped that we would never become a democracy. I mean, democracy was not some foreign term. The founders were very familiar with democracy and its history of failure. And that's why they tried to create a country that would not become a democracy. That's why they created a republic. There were some democratic aspects to the republic, but it was not a democracy, and for good reason. And a lot of people couldn't vote. I mean, there are a lot of restrictions on voting. And that was a good thing because it meant we had much better government. Now that everybody is voting, we have rotten government. And so everybody is worse off, including the people that can vote, right? If you can't vote and you get good government, that's better than being able to vote and getting bad government. Let's see. My thoughts on uranium. Yeah, again, like lots of commodities, uranium is going to go up. And especially if oil goes way up, and so, we move more towards nuclear power, that's clearly going to cause uranium prices to rise. Let's see. Happy little psycho. Okay, all right, we're nearing the end of these questions, which is good. I'm losing my voice here. What are my thoughts on carbon trading? I really don't have any thoughts. I've never traded carbon credits. I mean, I have no problem. With a free market, trying to allocate these credits so that the people who need them will pay for them, and you have some kind of free market pricing of this. But I just don't like the whole concept that the government is even involved in the first place, where a business has to even buy a carbon credit. But to the extent that we're trying to cut down on emissions, I don't believe that the federal government should be involved. I think the states should be involved. Yeah, I know there's, obviously there's, the fact that, the air, the water can go from one state to another. But I think there's a better way of dealing with that than to have this huge environmental agency at the federal government. But it's only going to get worse if we start implementing any kind of Green New Deal type of programs that are going to further burden the economy with regulation and higher energy costs. Okay, Jerky Gold, where can I find your dad's books for sale? We only have a couple of them actually at schiffbooks.com. I got a couple of my dad's books. I think The Kingdom of Malts and Federal Mafia is pretty much all I got left. But you can find my dad's other books on eBay, on Amazon. Obviously, there's not many new copies around. They're used copies. But sometimes they're pretty expensive to get the used copies. Is gold likely to outperform the gold miners? Over the long run, I don't think so. It certainly has over the last, 10, 20 years in general. Now, there are some gold miners that have outperformed gold, but as an industry, they have not. And that's really because the cost of mining has gone up a lot. So even though the price of gold has gone up a lot, the price of mining gold, the cost of mining gold has also gone up a lot. And so that's weighed on the profits of these mining companies. But when gold really catches up, when gold moves as much as I think it's going to, then I think these gold stocks are going to outperform. That's why I have most of my gold allocation personally is in mining stocks. I have a lot more invested in mining stocks than I have in physical gold. And that's because I'm making an aggressive bet. I mean, I think gold is going $10,000, $20,000 an ounce. And in that environment, I want to own all these gold mining stocks for some of the reasons I already expressed earlier in this Q&A. Okay, somebody said, should AOC be the Fed chair? Obviously, that's a joke. She would be even worse than Powell, right? And in fact, she doesn't want Powell to be reconfirmed because as far as she's concerned, Powell's not printing enough money. She wants him to print even more because she wants the Fed to print money to fund climate change initiatives. And supposedly to print money to close the wealth gap or for social justice for minorities, right? African Americans, women, homosexuals, somehow that these groups are going to benefit if the Fed prints more money. Unless these groups are specifically given the money that the Fed prints, but their gain is going to be at somebody else's loss. And at the end of the day, even if the Fed prints a bunch of money and gives it to African Americans, at the end of the day, they're going to be worse off. I mean, you always are. You get in bed with the government and you end up getting screwed. And that's what's going to happen because prices are going to go way up. And chances are prices will go up by more than the money you're given. So you're given some extra money, but at the end of the day, you buy even less stuff because the price has gone up much faster than the money that you've been handed out. And that's because, so much of the money just gets, wasted on the bureaucracy. Can I explain the difference between artificially low interest rates and naturally low interest rates? Sure. This is from Yashi Gold. Well, if the federal government or the Federal Reserve was not involved at all, right? If the Fed's balance sheet was not expanding, if the Fed was not manipulating the market, under what circumstances would interest rates be low? Well, it's supply and demand. Interest rates are the price for borrowing money. So what is the supply of loanable funds? That's the savings. That's the money that we don't spend, that we save. That's the money that is available to be loaned out. That's the supply curve for the interest rate. What about the demand? Well, that's everybody who wants to borrow money, from individuals who want to take out a mortgage or borrow to buy a car or to get a college degree or whatever. You got businesses that want to borrow to make capital investments or buy back stock, whatever they're doing. You have governments that want to borrow. They want to build bridges. They want to pay for the military or whatever they're doing. People want to borrow money. So you have all these people borrowing. You have this, other people saving. And then there's going to be the curves, the demand curve, the supply curve. They're going to intersect somewhere. You're going to get an interest rate. Now, where are you going to get low interest rates? In an environment where lots of people are saving and not a lot of people are borrowing. So in that situation where you have a large supply of savings, not a lot of borrowing, you're going to have low rates. But that doesn't describe America at all. We're the opposite of that. We hardly have any savings. Nobody is saving. And everybody is borrowing. So we have massive demand to borrow and not a lot of savings to lend. So we should have very high interest rates if we had a free market. We don't because the government has interfered to suppress interest rates. Now, if the government did interfere, what would happen? Rates would go way up. People would stop borrowing because it would be too expensive. More people would want to save because the return on savings would go up. And so now borrowing would come down, savings would go up, and that would bring the interest rate down naturally. But that's not what's happening right now. We have artificial manipulation, and the result is a disaster. I mean, it always is. Whenever the government interferes in the free market to fix prices, it creates problems, shortages, surpluses. It's always a mistake. And this is an even bigger mistake because money is a very important price. I mean, it's 1/2 of every transaction, and we've gotten it wrong thanks to the Fed. Mr. Tired All the Time, have you considered owning a power plant? Have I considered owning one? Well, I own stock in utilities and power companies, so I own, I'm an investor around the world in foreign countries in companies that provide power. But I've never, owned my own, right? As a private entrepreneur, I've just had shares in public companies, and they're good. They're good investments. They pay good dividends. And, they raise their prices. If there's inflation, they raise their prices, I get a bigger dividend. Okay, Logan the Rice. Thoughts on the coming expansion of Fannie Mae and Freddie Mae programs. I don't even know if there is an expansion. I know they're on the back burner there. They've been trying to resurrect these guys. I would like to see the government get out of the housing subsidizing business because of government's involvement in housing. Housing is a lot more expensive and less affordable than it was before the government got involved. And it's also screwed up the whole process. Look, if you want to buy a house, you need to afford the house. You need to have a down payment, which historically was 20%. The government should not be making it easy for people to buy houses who haven't been able to save up a down payment. Now, of course, you wouldn't have to put up as much a down payment if the prices were lower. And if the government stopped subsidizing mortgages, prices would be a lot lower. Real estate prices would be lower. And so people wouldn't need as much money to buy a house because they wouldn't cost as much. And if you're going to go to a bank and borrow money to buy a house, it should not be based on the government co-signing your loan. You should have to be able to prove to that bank that you can pay back the mortgage, and that the bank shouldn't get some kind of government guarantee. Well, if this person doesn't pay it back, don't worry, it's guaranteed by the government. We don't want that kind of moral hazard. Don't buy a house that you can't afford. Right? And if you have to borrow money, then you need to demonstrate your own ability to repay that loan. And if you can't, then you have no business buying that house. You need to rent. And there's nothing wrong with being a renter. In fact, I rented houses and apartments almost my whole life. I didn't even buy my first house until I was in my 40s, right? In my late 40s. By the time I bought, I was renting all until then. And nothing wrong with that. Didn't stop me from succeeding because I was renting. And so if you can't afford to buy a house, you rent. And you keep renting until you can afford one. Houses are expensive. They cost a lot of money. Not just what it costs to buy them, but what it costs to maintain them. Right? You got to fix stuff that goes wrong. You got to pay insurance. You got to pay property taxes. Maintenance. I mean, the houses are money pits. That's not what realtors tell you. They say, oh, buy a house to get rich. You can get poor, go broke buying a house. You work hard to get rich. Save your money. Invest your money. You don't get rich owning a house and living in it. You can get rich in real estate, developing it, having rental property. You don't get rich just sitting in a house. Now, there are, exceptions, certain periods of time, like, people that are here. I mentioned I'm living in Puerto Rico. The houses in my neighborhood are up 4 or 5-fold in the last couple of years. I mean, most of that gain in the last year. So, yeah, if you would have bought a piece of property here, you could get rich, but that's the exception. That's just because all of a sudden you have massive demand. Everybody wants to live here, and there's not a lot of supply. They're not building a lot of new houses. And so the prices go way up. So that can happen, if you get lucky. But in most cases, real estate depreciates over time. The property, the building wears out. Over time you use it. It breaks down. That's what a teardown is, right? There's an expression in real estate: the house is a teardown. That means the house is worthless. All teardowns were new homes, right? At one point, today's teardown was a brand new home, and now it's worthless. Now you got to pay to get rid of it, right? Maybe the land still has value, but the house is worthless because it's been lived in all these years, and people didn't spend enough money maintaining it. All right, the last question. How long have I been doing this? Paul, how long have I been doing this?
98 minutes.
my goal was an hour, but you guys asked me so many questions that I'm in my second hour. But anyway, here is the last question. It is from Dave the Rave 007. What's your handicap? Are you referring to my golf handicap? I don't know. I mean, other than that, I don't really know what my handicap might be. But when it comes to golf, I don't even have a handicap. I mean, I don't play enough golf where I even have one. I mean, I rarely even keep score. I mean, I'm playing golf. And in fact, I just bought a brand new set of clubs just to incentivize myself to play some more golf. Because in my community, we got, golf courses all over the place. And so I got to spend more time golfing. But I'm working, I'm doing, these Q&As on Instagram, but doing my podcasts and running businesses. So, and then I got, young kids that I want to spend time with too. So I'm not golfing as much, but I'm going to try to golf some more. Maybe one day I'll actually have a handicap. For now, my handicap is that I suck at golf. I mean, I'm all right. I mean, I can hit, some good shots, but not consistently. That's the problem. I guess I'm not consistent because I'm not playing enough. So maybe if I play some more, I'll get a little bit more consistent, and then I'll enjoy the game a little bit more, and I'll play it. Anyway, so that's it for today's Q&A. And remember, if you're not listening to my podcasts on a regular basis, I know I'm speaking now to the Instagram audience. Make sure and go to my podcast at Schiff Radio. Listen to that, or on my YouTube channel. And by the way, I am going to probably upload this Q&A to my YouTube channel. So if you are on YouTube, I've got, over 450,000, 460,000 people who subscribe to my YouTube channel. I don't even have 100,000 people on Instagram. Now, sure, I got to Instagram much later, but if you're subscribing to my YouTube channel and you see this, go over to Instagram and follow me there too, and then you'll know when I do something like this. You'll be able to participate live. You'll be able to ask a question. We might do more stuff on Instagram in the future. Obviously, the more people who are following me on Instagram, the more likely I am to do stuff, because there are more people that are going to appreciate it or benefit from it. So that gives me a greater incentive. Also, if you're following me on Twitter, if I tweet about this, I've got a 525,000 or something like that Twitter followers. I forget exactly how many. So most of the people who follow me on Twitter are not following me on Instagram. So let's get some of you guys to follow me over here and encourage your friends. I mean, if you're on Instagram and obviously you've got other people in your circle, send this Q&A out, or send them some of my stuff, or encourage some of your buddies to also start following me on social media and paying attention to the things that I'm saying. Because there's so much nonsense out there, so much economic ignorance that is being peddled by the mainstream. And so, there's not that many voices out there. I mean, I'm not the only one. I mean, there are other people out there that I think are very worthwhile of following. But, I think I'm included in that group. And I think in general, I have a very interesting way of explaining things. I break things down to very simple concepts. I use a lot of analogies that are easy to get. Sometimes there's a lot of humor in my podcasts and the things that I'm saying, and so it makes it easier to learn stuff. It's like a spoonful of medicine. I mean, medicine goes down better with a spoonful of sugar. So I'm trying to educate people in a way that's entertaining, and so therefore they stick around and they actually learn something. Because a lot of people, they just go straight to the medicine, and then they lose people. They don't listen to the podcast, and they don't get the message. So I think a lot of people listen to my content and then they learn. And so the more that people can spread the word about the fact that I'm out here, and get your friends following me and listening to me, we can push back against the forces of statism and big government, because that's an easy message to sell, right? Freedom, liberty, that takes some thinking, right? I'm selling knowledge. I mean, you gotta really understand this. It's very easy to just pretend that you care about people and try to appeal to people based on their emotions and based on their heart. That's easy. Appealing to people based on their intellect, that's a lot harder to do, and that's what I'm trying to do. And so you can help me do that by helping me spread the word. Anyway, thanks everybody for tuning in, And I'm about to take a break and I'm going to go have my dinner. So bye for now. Oh, I got to push this X. All right. So long, everybody. Okay. Are you sure you want to end the live video? End now.